Welcome, Benzinga Nation. We've talked about mining and minerals in the past, and we got such great feedback, and the demand was there. So we had to go ahead and bring it back for y'all because we've got some great conversations lined up. I mean, you've got gold hitting all-time highs, and so many things are happening in the mining and minerals world that I hope you got your shovel ready because today we're digging deep and exploring the depths of mining. We've got great guests lined up for you, different angles that we want to provide to you as well from analysts, executives, and get you all the different taste that we possibly can in the world of mining. We're going to go ahead and kick things off. I'm going to bring my co-host Melanie up so we can go ahead and get the show on the road here for our mining webinar. Melanie, how are you?
I'm good. How are you, Zaid?
I'm doing great. You were at PDAC, and I know you had some great conversations with people there as well. And I know you've got a great one lined up with Patricia. So the floor is all yours.
Awesome. Yeah, it was great at PDAC to talk to Patricia Mohr, economist and commodity market specialist, and the former VP of Scotiabank.
Awesome. Well, I'll get out of the way and we'll get this party started.
Sounds good. Hi, Patricia. Welcome back to Benzinga. How are you doing?
Very well, thank you.
It's awesome. So exciting day for gold. It set another record high and is trading at about $2,214 today. What's driving the rally and what's your outlook for both the short term and even the longer term price action?
Well, I think a lot of the strength in gold has to do with fear of a widening war in the Middle East. As you know, gold is a store of value and a hedge against financial risk. Including inflation risk, and geopolitics very often play a big role in gold. So I do think the difficulties between Hamas, Israel, and Iran, Hezbollah, these things are playing into the record prices we're seeing for gold. I think in the short run, we could possibly see gold moving towards 2,400 per ounce. Now, it's going to depend, I think, a lot upon the geopolitics. Also, of course, the Fed is expected to begin lowering interest rates at some point later this year. Could be an indication tomorrow being April 10th, on the just what's happening on inflation in the United States. There may be a sign if inflation moves down that the Fed may move to begin lowering interest rates around June. That would be a positive for gold because gold does not pay interest. So when interest rates move down, gold usually moves up. So I think in the short run, it's possible to see 2,400 per ounce for gold. Longer run, in the next 5 years, possibly towards a $3,000 mark. And that's based on where gold was back in early 1980 when it moved to record highs. And if you inflation adjust those numbers in today's dollars, you'd get something a little over $3,000 per ounce. So I think the outlook is positive for gold. It's something that I think investors might like to have a little bit in their portfolio. Don't go overboard, but it's always a good risk if you're thinking about hedging financial risks.
Another metal that you're bullish on that we talked about back at PDAC is copper. You were anticipating at PDAC a move over $5 a pound within a few years. When we last spoke, copper was trading at about $3.85 on the LME. And since then, the price has climbed to a 15-month high north of $4. How do you assess the current market conditions and price movements in the copper market? And where do you see the price of copper reaching $5? Or do you see your projection of $5 coming sooner?
Well, I think gold has gotten a bit of a lift in the last month. By expectations that smelters and refineries in China are going to announce a cutback. And this is because concentrate supplies for copper are very tight internationally. And they have tightened because of the shutdown of the Cobra Panama mine in Panama last year. And also expectations that Anglo American will have lower production than originally expected this year. That's going to offset the further ramp up of a number of projects, including Teck's Quebrada Blanca mine in Chile and Ivanhoe's Kamoa-Kakula mine in the Congo. So instead of having a small surplus in copper this year, the market now expects a small deficit. And that's the thing that's kind of driving copper up. And I continue to have bullish expectations for copper. I think copper is going to move over the $5 mark probably in another year. And I think the recent shutdowns are a sign that that may happen sooner than the market has been expecting. So I do think that is an area of real interest for investors.
Investors have also taken an interest in uranium, and there's been a recent surge in uranium prices. How do you interpret this upward trend, and what factors do you believe are driving the momentum in the uranium market? For example, why are governments becoming more interested in nuclear power?
Well, nuclear power, as you know, emits almost no greenhouse gases. And also the other pollutants coming from nuclear are very small. So it is an environmentally quite friendly source of electricity. There's going to be tremendous demand for electricity around the world in the next decade. And that has to do with really the shift to the electric vehicle and the electrification, digitalization of a lot of industry. And of course, interestingly, I think all the interest in AI technology may actually be quite power intensive. So we're going to need a lot of electricity to power these things. And nuclear is a very good option. The Chinese have a huge, absolutely massive construction project for nuclear power plants across China. Japan is going to bring back on stream some of the plants that it shut down after the Fukushima accident. And of course, the demand is very high in the United States. The nuclear power plant situation has stabilized in the US. So I think the demand growth for uranium is going to be very good.
What do you see for pricing for uranium in the future?
Well, the price got up on the spot in terms of spot prices for yellow cake, slightly over $100 per pound. It fell back a few weeks ago to about the $95 mark. Now, these are high levels for uranium prices, not peak levels, but they're high. And it compares to about $30 back in early 2021. So what appears to be happening is uranium miners are starting to ramp up their mine capability. Cameco, which is the world's biggest publicly traded uranium company in Canada, it's going to restart McArthur River, which is really a big mine in northern Saskatchewan, also ramping up Cigar Lake. Some of the mines in the United States are also going to be restarted. Some mine capability in Africa, excuse me, will also be restarted. So it might put a bit of a damper on near-term prices for uranium, but we're way off the record levels of a decade ago. So I think that a lot of the uranium producers, even if prices don't move up too much more in the near term, they're going to benefit from higher volumes and a very good outlook there.
We also talked at PDAC about lithium prices. Could you provide an update on your outlook for lithium, given the recent fluctuations and the environmental inspections in China? And do you see any significant changes in the demand and supply?
Well, lithium suffered really quite a tumble last year. Lithium carbonate prices in China went from record highs of 85,000 per tonne back in December 2022. They fell to a low just over $13,000 around February this year. So the price has edged up in the last couple of weeks. And it's edged up because the refineries in China had destocked, which was one of the key reasons for the price tumble last year. They're restocking, the price has come up a little, but I think it's going to be a very slow recovery for lithium.
That's awesome. Well, thank you again for taking the time to talk to us. It's always a pleasure speaking to you.
Thanks very much, Melanie.
Okay, I think coming up next, Sunaid had a chance to talk to Alex Wylie, the CEO of Volt Lithium.
Yeah, it was a great conversation. Let's get to it. Continue the great conversation. Now I've got with me Alex Wylie, who is the founder, president, and CEO of Volt Lithium. Ticker on the TSXV is VLT. Alex, thank you so much for joining us.
It's good to see you. Thanks.
Absolutely. If you could kind of, before we dive into the nitty gritty of things, if you could just give me a quick overview of your company, that'd be great.
Yeah, absolutely. So what Volt Lithium does is we do lithium extraction from produced water associated with oil field brines. And so the oil and gas industry in North America produces a lot of water. They're producing a lot of water, of brine today that has lithium in it, and we're doing extraction of lithium from that brine.
Now, when it comes to lithium itself, right, how do you see things playing with EV demand increasing? Do you have any thoughts on that?
Well, I think it's we're seeing worldwide growth in EVs right now. I think that part of the issue with EV growth in North America is our interest rates. And I think as we start to see a reduction of interest rates, we're going to see the EV growth take off again. It's really financing risk from the consumer perspective. So I do see where it's going to grow quite a bit.
Well, speaking of that, you have what's impressive with Volt Lithium is how you managed to reduce your production costs, right, for the Rainbow Lake project. Is this something that you can replicate, though, for future projects, and how so?
It is, because we have a process that we've developed. So our process is consistent. We have been testing some brines throughout North America, and our results are consistent. The big thing that we've done, we've really dropped the costs on the front end of our process and the back end. And so by able to improve our process for processing lithium, that has been driving our costs down.
And what's so special about the Volt Lithium's direct lithium extraction process? That's something I'm kind of curious about.
Yeah, I mean, what we're able to do is process or extract lithium from low concentration brines. So the concentration in Rainbow Lake is 34 milligrams per liter. And that is pretty extraordinary when you look at it relative to other brines. A lot of people say it's a challenge to do that. Our process works at very low concentration. The effect of that is it opens up really big markets for us.
With you kind of being in this space, do you have any predictions or projections, I guess might be the better term, with the price of lithium in the near future or the long-term aspect of it?
I think the lithium price, and then it's starting to strengthen up now, which is positive. I think whenever you're in a situation with low lithium prices or any low commodity prices, a lot of the high cost production gets shut in. And once that starts to happen, you see a strengthening of the lithium price. We're starting to see it now. I think the other major thing that's going to happen is with the U.S. IRA, or the Inflation Reduction Act. They're banning imports of critical minerals from places like China starting in 2025. Yeah. So when you see the bottom end of the market, or a lot of where the refining's coming, I think you're going to see a strengthening of lithium prices in North America.
Well, speaking of the government aspect of it, do you see any headwinds or tailwinds with what the government might be doing to come into step into the lithium aspect of it?
it's whenever government gets involved, I think it can get a little bit more challenging.
Yeah.
I think what has to happen is projects have to be able to stand on their own, and they have to be able to stand on their own without grants or without support.
Yeah.
And I think once a project can stand on its own, you're a low cost producer, industry will step in and will really get growth in lithium production. I think the big issue that we have in North America right now, let's say from a government perspective, the best thing that could happen would be to do a better job of managing environmental and permitting. It just takes a very long time, especially for the miners to really get a permit to get into production. And that is a challenge slowing the growth in North America right now, in my opinion.
Yeah, we saw the grants kind of help Tesla with their EV growth in the beginning, and now you have Tesla that's not able to meet their delivery expectations. So, it can be a bit of a trampoline, but then like you said, you've got to be able to hold your own and continue that momentum. What are the future plans of Volt Lithium in terms of production and the processes of lithium, especially trying to build your own plant or shipping to refineries in the US?
It's really going to come down to what's more economical. Is it more economical for us to refine up in Rainbow Lake? Yeah. Or is it more economical to ship down to the US? And we're exploring both options right now. What I can say is, as we continue to reduce our costs, it opens up the opportunity to do our refining in Rainbow Lake as opposed to sending to the US.
And I kind of briefly touched on this, but I'd love to get a little bit more insight in terms of what gives your company the edge, right? Like the real advantage compared to your competitors.
Well, we're in a bit of a unique world because our competitors, we're trying to figure out who our competitors are. Do we compete against the groups that are doing hard rock mining? I'm not so sure. I mean, we're in a pretty unique area because the production of what brine that's needed to extract lithium, it's happening today in the oil and gas industry. So one of the things that we don't have to do is take exploration risk, and that's very different from everybody else. And so we've taken the view that let's not focus on drilling wells or mining to get the lithium. Let's use what's in place today. And that's what I think gives us an advantage over us, especially in terms of time to market. I mean, we've said all along, we want to start initial production in 2024, and we're on track to start, at least on an initial basis, late 2024, early 2025. So we're pretty excited. The goal for everyone should be get into production sooner. And I think that maybe a bit of an advantage that we have is we don't need the permitting and everything to get into production because the brine is being produced today.
And then one final question for me as we wrap this up. Any plans to uplist on the NASDAQ or NYSE that you're able to speak of? I know there's certain things that you can't, but I got to ask.
Absolutely. I mean, as we start to establish production and start to scale up, we need to get to a larger market, and an uplisting on the NASDAQ or NYSE makes a lot of sense for us.
Absolutely. And, any final thoughts from you? I know we've talked about a lot of things in terms of price range, inflation, and your future plans as well, but any topics you wanted to kind of discuss that I didn't bring up here?
I just think the main thing to watch for is, watch for what happens from a regulatory perspective in the U.S. And I think from the time to get to speed to market is going to be critical. So we're very focused on both, and our goal is to get into production sooner.
All right. Well, hey, I look forward to that and more conversations as you reach these milestones. Alex, thank you so much for your time.
Thank you. Have a nice day.
You too. That is Alex Wylie, who is the founder, president, and CEO of Volt Lithium, ticker on the TSXV is VLT.
Okay, well, that was a great interview. I know that investors are definitely starting to turn their attention back to lithium. Next up, I'm going to be speaking to Rick Rule, the founder, president, and CEO of Rick Rule Investment Media, LLC. Welcome, Rick. Welcome back to Benzinga. How are you doing today?
I'm fine, Melanie. The better for being in conversation with you. Thank you for having me.
Thank you. So you're known as a bit of a contrarian investor. That style has done really well for you. What does it mean for our listeners to be a contrarian investor? And how has it helped you throughout your career? And how has it helped the investors who've learned from your school of thought?
I would suggest that for a contrarian, arithmetic is more important than narrative, which is to say most people chase what's hot, what's popular, which is another way of saying most people chase what's overpriced. If you chase what's not hot, to paraphrase Buffett, if you buy straw hats in winter, it's easier to accomplish that investment goal, which reads buy low, sell high.
Yeah.
You can't buy low in a sector that's very crowded with other participants. It's just impossible. An example would be, currently as an example, uranium is in favor now that it's $100 a pound. In 2022, it was $20 a pound. And most people, despite the fact that it's a fairly short word, couldn't spell it. At $20 a pound, it had to go up in price because the industry was in liquidation at that price. But uranium was necessary for the continued well-being of humankind. When the price had to go up, nobody cared. Now that the price has gone up, everyone seems to care. I would suggest to you that that's the definition of contrarian investing. Contrarian investing, Melanie, requires patience. It's ironic that at age 71, with less time left on Earth, I'm much more patient than I was at 25.
Yeah.
It isn't because I wish that investments would take a long time. It's because I've observed that in my life. So in 2022, investing with the view to harvesting the investment in 2024 or 2025 wasn't problematic for me. But for many people who seem to have trauma holding stock over a long weekend, it is, in fact, difficult for them to do.
Yeah, it's such an important lesson, I think, for, especially for the retail investors who are coming into the commodity market. During an interview with Benzinga at PDAC last month, you discussed the lack of technique that some investors have when choosing how to invest in junior miners specifically. How should retail investors better prepare themselves for investing in the junior market? And are there any speculative stocks that you're watching?
Well, first off, I think that most investors misunderstand how value is created among the juniors. They think about the juniors as being asset-intensive businesses. They're not, at best. They're knowledge businesses. Exploration is a form of technology. And money is made by answering a series of unanswered questions, increasing the knowledge around an asset so that you get some idea of its value. Most investors get it exactly wrong to begin with. And it shouldn't be surprising that the outcome is lousy, except in the case of accident. The first part of adding value then in intellectual property is intellect. Success revolves around a very, very, very small number of people. Pareto's law suggests that 20% of the population base engaged in any given activity generates 80% of the value, the old 80-20 rule. The truth is that population base run through the same performance dispersal curve will conformably align again, which means that 20% of the 20 or 4% of the population base will generate 80% of the 80 or 65% of the success. What that means for junior mining investors is that they need to hang out with people who have been serially successful, which is to say less than 4% of the population base engaged in the endeavor. The rest of them, sadly, are flotsam and jetsam. It seems like an elitist statement. Unfortunately, it's true. And then, of course, there's arithmetic. We discovered years ago in a random sample of VSE companies before the TSX took over the VSE that of 25 companies sampled, the median spent more than 60% of capital raised on general and administrative expense, non-exploration expense. How's that going to work? So investors need to pay attention to the income statement, to the balance sheet, to the proxy. They need to confine their investments to companies that are spending, at a minimum, 75% of capital raised in the ground, rather than on G&A. The probability that you're going to enjoy exploration success if you're spending your money on general and administrative expense as opposed to exploration is de minimis. So why bother? Most people get that wrong. I have, by the way, 200 hours of instructional programming, absolutely free, at the Rural Classroom for people who want to really do deep dives into how to analyze natural resource stocks. It starts by investing your own time. Many investors own 60 or 70 juniors. There is no way that they can devote enough time to understanding their portfolio to maintain that many stocks. We advocate limiting the number of stocks in your portfolio to the number of hours per month you are willing and able to spend studying them. So 10 hours a month, 10 stocks. I hope that helps, Melanie.
Yeah, no, that makes sense. It's putting in the work, right? When you're investing in these sort of speculative stocks. Are there any speculative stocks that you're watching?
A ton. We are in a wonderful position now where for 7 or 8 years, the juniors have been out of favor. And that's a wonderful circumstance. I've been out of the juniors because if you go back 7 or 8 years ago, the price of the juniors relative to the price of less riskier mid-tier or senior companies was too high. But that problem has taken care of itself. I like tier one discoveries, and I like tier one discoveries in places and in commodities that other people don't like. So one example would be an Australian listing, Meteoric, which I believe has a tier one rare earths discovery in Brazil. Terrible market performer, which I like even better. It's cheap. I'm attracted to another Australian explorer, Centaurus, although it does have a Canadian listing, which has a platinum and palladium and nickel discovery in Brazil. 3 commodities that are distinctly out of favor, which of course I also like. I like another Australian listing called Sovereign, which I think will end up having the first or second best rutile discovery in the world, while simultaneously having the first or second best graphite discovery in the world. In terms of Canadian juniors, I continue to be attracted to Reunion, which I think has a chance to have a tier one gold discovery in Guyana, particularly if you merge them, which the managements haven't agreed to do, with their neighbor, G2. I think if you do that, you have some risk of ending up with a 10 million ounce deposit, ultimately, a tier one deposit by any means. And Melanie, I'm attracted to the whole range of greenfield exploration juniors that are known as the prospect generators. The boring companies who use their intellectual acumen and commercial talent to generate exploration concepts and then farm those concepts out to sole risk explorers in return for a carried interest and or a royalty. I'm attracted to the whole waterfront of those. There's 72 of them at last count.
Wow. And, you know, speaking about gold, you mentioned a Canadian gold company. What are your thoughts on gold right now, reaching all-time highs?
Well, let's explore that all-time high. That's in nominal dollars, not in real dollars. If you do inflation adjusted to dollars, gold hasn't broken out to all-time highs against the US dollar. It has against other currencies. But the truth is that I don't think gold really goes higher. I'm afraid, in fact, that it goes much higher. Afraid because the set of circumstances that take gold higher normally are very unpleasant for the rest of your life and the rest of your portfolio. And my life is very good, thank you. I just experienced those challenges. But I think what you've seen in the gold price really has been gold moving more because of foreign central bank buying than retail buying. Until 10 days ago, throughout 2023 and 2024, there was disintermediation out of physical gold, at least the physical gold ETFs, by retail investors. The buying that has moved gold higher has occurred largely from foreign central banks who are concerned about the extraterritorial imposition of U.S. power and will. As little as those countries trust us, it turns out they trust the United States more than they trust each other. So they don't want to deal in each other's currency. They need a medium of exchange that's simultaneously a store of value. For 200 years, 2,000 years, pardon me, that's been gold. If you, as I think you will, begin to overlay retail buying on this central bank buying, retail buying that would occur because retail investors are concerned about the maintenance of the purchasing power of their savings denominated in US dollars, then I think you see real upside in the gold price. Will that occur in 2024? I don't know. 2025? I don't know either. But unless Canada and the United States find a way to deal with debt and deficits, unless they find a way to raise interest rates on deposits to the level that compensates people for the deterioration of their purchasing power in Canadian and U.S. U.S. savings products, I think it is inevitable that people begin to be concerned about the maintenance of their purchasing power in conventional instruments. And fleet of gold. One statistic, if I might, Melanie, that will put the opportunity in context. In the US market, the market share of gold and precious metal securities is less than 0.5% of total savings and investment assets in the United States. The 4-decade mean market share is 2%. So gold doesn't need to win the war against the US dollar. It needs to lose it less badly. If gold's market share relative to other classes of savings and investment assets returns to the 4-decade mean, which I believe it will, that means that demand for this asset class will increase fourfold, which is precisely what I think is going to occur. And remember that prices are set on the margin. A quadrupling of demand can do a very strange thing to price in the absence of large increases in supply.
Well, that's something that our gold investors are going to be very happy to hear from you. Thank you so much for talking to me. It's been great.
A pleasure. If I might, I would invite your investors to visit my website, Rule Investment Media. There, if they list their natural resource portfolios, I will evaluate them personally at no cost, no obligation. Simply list your natural resource stocks. Please no crypto, please no tech stocks, please no pot stocks. Leave an old guy to do what he does best. I'll rank them 1 to 10 and I'll comment on individual issues where I think my comments might have value. Thank you for the opportunity.
Thank you. Okay, earlier I had an exciting opportunity to speak to Warwick Smith, the CEO at American Pacific, and we'll click over to that now. Pleasure today to talk to Warwick Smith, the CEO and director at American Pacific Mining Corp. Ticker on the CSE is USGD, and on the OTCQX, it's USGDF. Welcome, Warwick. Welcome back to Benzinga.
Thanks so much. How are you, Melanie?
I'm good. How are you?
I'm good, thanks.
So let's get right into it. American Pacific has already announced several key updates this year, specifically exciting results at the Palmer VMS project in Alaska and the 2024 drilling plan at the Madison Copper Gold Mine project in Montana. What progress has American Pacific made at these two projects, and what do investors have to look forward to this year?
Yeah, I mean, investors get to look forward to an awful lot of drilling, that's for sure, which is the key driver for these mining companies. You want to see the companies that you're invested in drilling those assets and making them bigger, which is exactly what we intend to do at both assets. So up in Alaska, the Palmer project, we're partnered with Dowa Mining and Metals, who own the largest smelter out of Japan. We'll be running a $12.8 million US program focused on exploration this year, which is a bit of a departure. But after such good results, strong copper results last year, we're going to focus on some exploration, looking to make the project even bigger than it is today. And then down in Montana, we own 100% of that asset. We're going to get out, drill that aggressively, and we'll start that probably in May of this year. Both drilling into the skarn and then drilling down deep, looking for the porphyry potential at the Madison project as well. So an awful lot of drill data coming out this year.
That's very exciting for investors. Speaking about copper specifically, can you just, for our readers, go over the role of copper in the energy transition and why it's considered crucial for the advancement of clean technologies such as electric vehicles, wind and solar, and nuclear power?
Yeah, absolutely. Listen, if the world's going to go green via this green revolution, it's going green via copper. Every American requires 12 pounds of copper every year to maintain their standard of living. Just to sort of give you an idea, there's roughly 600,000 EVs on the road today, and they're hoping by the end of 2025 that there'll be 7 million on the U.S. roads. Give you an idea, a conventional car, so your average gas car, has 18 to 49 pounds of copper. A hybrid plug-in has 85. A full plug-in electric has 132 pounds. And then just a battery, an electric vehicle has roughly 183 pounds of copper. So to get to net zero by 2050, you'd have to double the amount of copper that's come out of the ground from the beginning of time, from here to 2050. So copper will play a significant role in this going green revolution. And what that essentially means for copper prices is that they're likely to continue to rise. We're seeing $4.20 copper today. Goldman Sachs is predicting $4.54 a pound by the end of the year, $5.45 next year. And then by 2025, they're predicting $6.80 a pound copper. So significant increases in the commodity itself. And it's difficult to find these advanced copper assets. JP Morgan put out a note talking about how difficult it is to find these advanced assets. With a lot of the larger assets that are getting towards the end of their life or getting down into lower grades. That's where something like Palmer comes into play. We've got 196 million pounds of copper there. That's at good high grades. With a world-class partner that owns the largest smelter in Japan. So it works incredibly well in our favor.
So you mentioned the backing that you have by DOA. You're also backed by some other major names in the mining industry. What other companies are involved with American Pacific, and what does that mean for investors?
Yeah, I mean, over the course of time, since the inception of American Pacific, which was in March of 2018, we've worked with OceanaGold, we've worked with Rio Tinto, we've worked with Centerra, we've worked with DOA. So some of the largest names in the mining industry. Look, I think for investors, when they're looking at junior mining companies, I always suggest to groups that they look for ones that already have majors involved, because in many ways they've done the due diligence for you. It's hard to diligence junior mining companies in that it's hard to understand exactly what's happening with projects unless you're a geologist or a mining engineer, etc. I can tell you through experience, before one of the major mining companies gets involved, they do an awful lot of diligence. They want to know that A, they think they can find it, and B, if they find it, that they can put it into production. Those are two big hurdles that are crossed for your average small family office or small fund, retail investor, etc. A lot of that work's done for you if you've already got the major involved in a junior mining company such as ours.
The projects American Pacific is working on not only contain copper, gold assets, but also other metals and minerals such as silver and zinc. Why are those metals important in the energy transition, and where do you see the prices of silver and zinc heading over the mid to long term?
Yeah, so it's interesting. We're copper zinc dominant up in Alaska, and then a gold copper dominant down in Montana. So zinc's an interesting metal. I mean, it's the fourth most used metal in the world, behind iron, aluminum, and copper, and it plays a critical role in the green technologies such as solar and wind power. It also works for batteries. It really is tied to how the world's economy is doing. So we'll see. These are interesting times. So we'll see how the economies shake out and how the price of zinc does. In terms of silver's having its day in the sun for sure. Trading at $27 today, looking like it wants to break 28. So it's done incredibly well over the short term here. Also used in things such as cell phones and cars, etc. So another good precious, but also / industrial metal that has a lot of play. The gold price, obviously over the past little while, has been incredibly interesting. It's moved significantly in the short term, so potentially a pullback here would make some sense. Although long term, it seems like gold wants to go higher. It really feels like the West is kind of losing control over the silver gold prices. and we're seeing China sort of being more dominant there and pushing those prices forward.
In terms of the drilling that American Pacific is planning to do throughout this year, you'll be submitting assay results, I imagine, as you go through, or what will the process be? What will investors be looking for throughout the year?
Great question. So drilling's going to start roughly in May on both projects. So typically you're going to get in, you're going to drill those projects. As you get a core out of the ground, you're going to send those off. You basically do a check at site, and then you're going to cut that core in half. Half of it goes to the lab, half of it stays with you. Typically takes a month, maybe a month and a half to get results back. So you'll be looking into June, July when you start seeing results come out, and then it'll be results from there through past Christmas. So into into 2025 now. So significant drilling coming, an awful lot of results for the rest of the year for us.
You talked a little bit about the future, and we know what's coming up for the drilling programs. Are there any other projects? I know you have other projects other than those two that you could discuss for investors.
Yeah, we do. We keep a sort of a stable of projects so that we're always sort of building those up and looking to take those assets to the next level. What we'll likely to do on those other projects is to bring in joint venture partners. We like the ideas of having other partners come in, and spend money on those partnerships while retaining a percentage of the project, or vending projects out where we take shares and cash back, but retain an NSR, et cetera. So advancing those projects without having to spend an awful lot of our own capital, it's been a good strategic way to move the company forward. And that's something that we'll continue to do. The other thing that we've done with some success is M&A. The main assets that we have all come through M&A. It's been tough for mining companies. We've been lucky enough to continue to have access to capital. So there's many companies that don't, but have great assets that maybe haven't been viewed properly by the markets yet. We have been nominated twice by S&P Global Platts for Deal of the Year for the different transactions that we've done. And so we'll continue to see what's out there, and if we can, we'll continue to transact and add to the portfolio.
That's awesome. Before we let you go, do you have any other points that you'd like to make or things you'd like to let investors know?
I think it's a really interesting time to be looking at mining companies. You've got metals that are running dramatically. You're coming into a position now where this is going to be a future focus for many investors, but it hasn't quite hit yet. That's a great time to be looking at these types of companies. For American Pacific, as mentioned, awful lot of drilling, potential new partnerships coming up, certainly very busy year going forward without having to spend a lot of our own capital. It's a unique position to be in.
That's awesome. Well, thank you so much for joining us.
Thank you, Melanie. Appreciate it.
All right, we'll continue the great conversation. We've got a few more folks left to talk to, and this time we're going to talk to Rob McEwen. Caught up with him earlier. He's a chairman and chief owner of McEwen Mining. We'll go ahead and continue the conversation because now I've got Rob McEwen, who is a chairman and chief owner of McEwen Mining. Rob, thank you so much for joining us.
Happy to be on, Sunil. Thank you.
Absolutely. And there's so much to talk about. So let's go ahead and kind of get into the matter of things. But before we do that, though, give me a quick, brief overview of what is it that your company does?
Oh, we produce gold and silver from 3 mines in the Americas, and we have a large copper project in Argentina. If you looked at us, besides the production, we have a royalty portfolio, and as I said, very large exposure to copper as well as precious metals. I own 17% of the company. I have $220 million invested at my cost, and I take $1 a year. And have for the last 19 years.
Yeah, well, you definitely, put money where your mouth is with that type of belief in the company. No question about that. You brought up gold. You brought up Argentina. Let me go ahead and talk about gold and silver. What are your thoughts on the overall market, especially with gold, continuing to hit all-time highs? The prices continue to go higher. What do you think is the reason for this? Is it the weakness in the U.S. dollar? And what are your thoughts on moving ahead of this?
There are a couple of factors there. One is the weakness in the dollar. Two is just there's a massive amount of debt out there, and there's concern about how do you service that and how it might imperil economic recovery. And then we're seeing central banks buying at a rate we haven't seen in 50 years. So it's probably not a bad idea to follow the central bank habit.
Yeah.
They're dumping their dollars and they're buying gold with them.
One mistake that I made in 2020 is that I was fighting the Fed because I don't know who I thought I was with my $1,000 option play. So yes, I agree with you 100%. You talked about Argentina, and we follow the elections there closely. It seems like the people are enjoying what the new president is bringing in, but has that impacted your business in any type of way?
It's altered the perception of Argentina slightly. Um, the new president is talking about cutting taxes, removing foreign exchange controls,
Yeah.
making it more inviting for foreign investment. And if he's successful, um, Argentina, I think of as a sleeping beauty. It has all sorts of natural resources, and he may be the prince that wakes up Argentina.
I
Um,
like that. Yeah,
so,
it's a really nice way to look at it. So you're expecting like positive if
yes.
things go the way that he intends to, and that he's been kind of promising in his campaigns.
Yes, and you're getting others looking at it, like the IMF said, we'll give you another 4.7 billion. The Chamber of Petroleum Producers said we'll put 15 billion a year into the economy.
Yeah.
What he's trying to do is cut out the bureaucracy and just make it easier for investments to occur and and develop a large natural resource base. If you were to look at Chile and Peru provide 40% of the world's copper annually. Argentina has a number of copper projects could make it a 13% producer. And suddenly those three countries would be the equivalent of Saudi Arabia as it is to oil, but to copper. So be a very important corner of the world.
Yeah, definitely some catalysts coming up on that side. Let's talk about the exploration program that you have at Los Azules. Tell us a little bit about that.
Well, we've done about 60,000 meters of drilling this year. We had 22 rigs on site, and the whole purpose was to improve the confidence, and increase the density of the drilling, and define our 5-year payback pit as well. We've stepped out a bit, and we found large intercepts to the north of the property. I mean, already we're looking at a property between indicated and inferred resources of 37.6 billion pounds of copper. So I've grown up in the gold industry, and I like to convert non-gold assets to gold equivalent.
Yeah.
This would be equivalent to a 68 million ounce gold deposit, producing about 600,000 ounces a year at a cost of under $600 an ounce, just to give you a sense. And going for 27 years, and we've only mined 40% of the deposit.
And, having these operations obviously is not cheap, right? There's a lot of capital that is required. And something that I noticed is that your company is cash flow and net income positive, which is great news. I know you've made a lot of efforts there. But looking ahead, what can you tell investors and potential investors that are watching about what to expect here in the near future?
Well, the copper, I think, is a copper unicorn, and we separated it from McEwen Mining. So McEwen Mining now owns 48% of it. I own 13. Stellantis, the fourth largest car manufacturer, owns 19, and the second largest mining company, Rio, owns 14%. So it's a big deposit. It's going to take a couple of years to build it. I don't expect it in production before 2030, but you're at the bottom of the cost curve for the industry. It's going to be producing 400 million pounds of copper at $1.07 a pound.
Yeah.
There's a big margin in there. So the copper's going nicely. And then we were, I'd say, a medium to higher cost gold producer, and the margin's opening up with gold now at $2,300 an ounce.
Yeah. One thing that I've noticed is when companies kind of grow and they have new opportunities, they put so much emphasis on growing and expanding revenue that sometimes margins get left behind. Is that something that you constantly are thinking about? Are you comfortable in being like, hey, as we grow, we make sure that our margins stay leveled the way that we want them to be and they don't suffer?
The company I built before this one, Gold Corp, I'd like to get to the point that we had with Gold Corp, where we paid a monthly dividend. We had no debt. We had 200,000 ounces in the bank of gold stored,
Yeah.
and just a very solid company. We haven't gone through that. From 2019 to 22, our share price was going south at a rather alarming rate.
Yeah.
But it's turned around, and I think we're on the road to redemption in the precious metals. It's stabilized. We posted earnings for 2023 of $1.15 a share,
Yeah.
as opposed to a large loss the year before, and looking forward to more positive news going forward.
Yeah, it makes total sense, which is why we kind of talk about the U-turn that the company has made already and is going to continue making. Before I let you go, any final thoughts, any topics you wanted to discuss and have our viewers hear about before you hop off?
Well, I guess every company CEO says, I think we're undervalued, but I do think we're undervalued. We have a high and low range management between the three segments of our business, and think we have a value between $8 and $32 a share. We're currently trading just below 11, but I think there's a lot of upside there. Even though since the beginning of September 22 to last night, we were up over 260%, and compared to copper, we were up 16 times copper. We were up 10 times what gold's done. We were up 11 times the Dow, up 9 times NASDAQ. So we've got a lot of room to go on the upside, I believe, because we came down a long way, and the copper's running nicely and the gold and silver is coming on smart. So
makes perfect sense. And I tell people all the time, if you can't invest in like the commodity or the actual item itself, you can find companies that have exposure to those things. So that makes perfect sense. Thank you so much for your time. I really appreciate it.
Thank you, Zanil.
Absolutely. That is Rob McEwen, who is the chairman and chief owner of McEwen Mining.
Okay, well, another great interview and an exciting time for gold investors. For the last interview today, I have the pleasure of speaking to Luke Norman, the executive chairman and co-founder at US Gold Corp. Ticker on the NASDAQ is USAU. How are you doing, Luke?
Well, thank you, Melanie. Yourself?
I'm doing good, thanks. So just to get us started, can you provide an overview of US Gold Corp and the 3 projects that you're advancing?
Certainly. We've got a gold and copper porphyry in Wyoming that we're soon to have permitted. It's a bucket-ready project. And we have 2 very big pure gold exploration projects, one in Idaho and one in Nevada. Our project in Nevada in particular is a monster as we see it, but right now we're focusing on our copper gold asset, and that's the one we'll talk today in Wyoming. That's the CK Gold project. It's about 1 million ounces of gold and 250 million pounds of copper in reserve. Sitting just near Cheyenne, Wyoming.
That's great. And I know people are very bullish on both of those commodities. What are the key points new investors should be aware of with US Gold, especially assuming they're not sophisticated investors in the mining sector?
Yeah, for sure. Well, look, first and foremost, especially to a largely US audience today, we're NASDAQ listed, which is a bit of a rarity amongst our peer group. Most of the junior mining companies are listed up in Canada. We're purely listed in the US here. Trade on NASDAQ under USAU. I think if we click over to the next slide here, it'll show you our share structure. But we have also a unique kind of a situation whereby we only have 9.3 million shares out. So we've got approximate 45 million US market cap today, with a lot of upside to that, clearly. So unique share structure. Copper and gold, as you pointed out, 2 very valuable commodities in the marketplace right now. So we'll be developing and producing a copper concentrate that's highly marketable globally out of the project. And I think one of the key takeaways for us is our location. So we're going to produce about 110,000 ounces a year under our current reserve schedule for 10 years, but there's a lot of exploration upside beyond that within the project. And that's gold equivalents, of course. So that's a combination of about 70% gold and 30% copper.
Can you discuss any partnerships or collaborations that you have or in talks with for the advancement of CK?
Yeah, certainly. Well, actually, that will be answered purely by our location. So another unique aspect to this project and what's helped us really move this along is we are located in the state of Wyoming. Wyoming's purely a resource state. The support from the local community, from the state government, etc., has allowed us to be in the spot we're in now. Like I said, we're expecting permits within the next couple of months here. If we were on federal ground, that would not be the case. You know, my peer group that are here and been presenting today, you know, they're challenged both in Canada and the US and beyond with dealing with federal bureaucracies when they get into the permit process. Ours has been just as arduous as dealing with federal government, but having the township of Cheyenne 20 miles due east to us, as you can see, we're about an hour and a half drive north of Denver International Airport. The location has really allowed us to collaborate with the state and get this through. So, yeah, it's exciting times for us, and what a great partnership we've had.
Can you sort of take us through what the timeline is or what your plans are going through to the end of 2024 or even into next year in 2025? Yeah,
for sure. You know, as I mentioned, we've spent the last 3 years engineering and collaborating, working with the state of Wyoming to understand this copper gold porphyry, to understand the economic benefits of this porphyry system. And we've put together, you know, a really good, robust mine plan. It's very simple mining. It's an open pit. The mineralization is exposed at surface. And again, all we do is process rock into a fine sand, which is a concentrate, and that's shipped off site. So we intend now to also look at some of the other economic attributes to this project. What we discovered through the engineering process was our waste rock is a highly valuable source of aggregates in the area, and aggregates are in high demand. So anything from rail ballast to concrete additives. There's a huge amount of growth going on in the Front Range of Colorado next door to us. So our next step will be to bring in some of those additional economic benefits into our feasibility and ultimately break ground and start producing.
So if we could just go and take like a sort of a macro view of gold and copper, where do you see the price heading over the course of this year and into next year?
Well, I've been very confident in the price of gold and copper for quite some time. So maybe I'm more of a broken clock. The fact that we've got a gold-centric, copper-centric market. But I do believe that's actually the case of a bit of inelasticity between the price of gold staying stagnant, copper even going through some pressures because of China's real estate issues, etc. But now I think the market's starting to realize that both gold and copper are grossly underpriced relative to the amount of inflation that we've experienced over the last 3 to 5 years. So I think that the long term for gold and copper is really good, really robust. And as you'll see actually on the screen, the snapshot we have of our economic forecast. Now, keep in mind this economic forecast was derived in December of 2021. So I mentioned inflation. Certainly inflation will have impacted these numbers from the cost of development. That's the CapEx number you'll see, 222 million. We think that number's gone up probably into the 260 range. But on that sensitivities table, you'll also recognize that we utilized $1,625 gold per ounce. It's up in the $2,300 range now. And our copper price at $3.25 also gives us a heck of a lot of margin. So our all-in sustaining cost, that $800 number you see in the table, that number would have gone up a bit, but not significantly. So it's a very high margin, well-located, and extremely fundable project. And again, none of those economics include this highly valuable aggregate source that we're now going to start factoring in.
Absolutely. So you're really hitting this at the right time, with where prices are going in the future, even the mid to long term.
Yeah, we're so well leveraged to copper and gold. It's wonderful. And having, again, waste rock that's highly valuable, those numbers are just going to improve.
Well, you've provided us with so much information. Is there anything else that you'd like to add?
Well, look, again, we are right on the cusp of receiving our permits to mine. I think that's a very, very valuable piece of information for prospective investors. Mm-hmm. As you can also see from our previous slide on the capital structure, we're very well managed from a share issuance perspective. We're not rushing out to dilute this into a massive equity raise into developing it. Our collaboration with the state allows us to be able to have very serious discussions with them regarding state bonding, potential municipal bonds to help raise the capital to develop this project. And yeah, I think copper and gold in the right part of the world, we're really well leveraged, and it's a fun time to be an investor.
Well, thank you so much for joining us. It's been great.
Yeah, no, thank you, Melanie.
Okay, well, and you're back, Zunaid.
Yeah, no, that was great. Luke dropped a little nugget for us. I hope the folks at home were listening, and we'll definitely have to do a recap on that one. But Melanie, before you kind of hop and I take the last interview here, any thoughts on mining as a whole before we get things going to the last slot?
Well, I think that we've been provided with so much excellent information from, the micro to the macro views. It's been great.
Yeah, it should be fun. Steve, you just give me a thumbs up when you're ready to go, and we'll get things rocking and rolling. I see you're good, Melanie. Thank you so much.
Thank you.
Absolutely. And we'll continue the conversation to our last speaker from Nevada Lithium. We've got Steve. The ticker on the CSE is NVLH. Steve, welcome to the show.
Hi, how are you? Thanks so much for having me.
I'm doing great. Thank you so much for joining us. We've talked so much about gold and mining, and so I'm excited to kind of get into the lithium aspect of things with you here as well. But before we do that, give me a quick overview of what is it that your company does.
Nevada Lithium's is a junior exploration / development company that's working on our core asset. It's about 2.5 hours northwest of Las Vegas in the state of Nevada. And what we have on our hands is a beast of a project that we think is going to be one of the centerpieces of Nevada's growing lithium industry over time. We're a very small company. We just came to the market under 3 years ago, and nobody's ever heard of us. And one of the reasons that nobody has is because we've been, frankly, very busy getting the entire ownership of this project into one set of hands. That's what our concentration has been on. So our project is something that we think is going to take us through 2030 when we come into commercial production. A lot of different facets to talk about. So I'll leave it to you as how you would like to have me take you into this.
Yeah. And this is the Bonnie Claire project. Do I have that right?
That's correct. Bonnie Claire. Yeah. Right now, a massive footprint of a project over the size of essentially Manhattan Island. And something in which we have relatively few holes in. If you think about it, potentially somewhere, if you're familiar with Manhattan, think about Midtown, right around 42nd Street. We have a swath of holes right in there and a bunch of extra property that we need to go through. But it's not just an exploration story. We're actually advanced. We have our first swipe at economics, which is a preliminary economic assessment. That was done 2 years ago. And what it showed is that Bonnie Claire could give us a 32,000 ton a year lithium carbonate equivalent project with a 40-year mine life at very, very good economics, which at the point in time where we were using very low lithium prices. And obviously, we've all seen the roller coaster ride of lithium prices over the course of the past 9-12 months. But I would argue that lithium prices, they need to be much higher going forward to bring all of the lithium that's going to be needed by electric vehicles into the world's supplies, over the course of the next 5-6 years. So there's a lot of good stuff we already know about Bonnie Claire, but there's also a lot that we're looking to find out going forward.
So you kind of give us a little bit of insight on the status. I want to get a little bit more in depth about the timeline of this project and what investors and potential investors that are listening can expect.
So the ultimate timeline is to bring Bonnie Claire into production by 2030, 2031. And then working backwards, we have to get through feasibility study before that, pre-feasibility study. And we're in the midst, as I said, 2 years now past our original PEA. Now, where we are at specifically is a very interesting point in time, and that's because of some recent news that we released about 6 weeks ago. And that is that in our last couple of holes drilling, we confirmed the existence of a very high-grade swath of mineralization. It's orders of magnitudes higher than our resource grade, which is already, frankly, our resource grade is called the number 3 in the world, the largest, with an overall grade is called 1,000 ppm, 0.1% of lithium. We've been finding massive blankets of much higher grade lithium, 2, 3, 4, 5,000 ppm for hundreds of meters or hundreds of feet, however you want to describe it, at depth. And it's open in 3 different directions. That's the kind of thing that we need to make sure we think about correctly, because we don't want to sterilize this property. We already have a massive resource. Now the question is how do we bring it into play to make our existing project even better? And that's one of the things that we're going to be doing over the course of the next couple of months going into the fall here at Bonnie Claire.
When your perspective now, right, because you've got the CEO hat on, you're also a former institutional investor. So with the lithium industry, what are some of the challenges that you see as we go with the growing supply of things?
I have never seen a mismatch in supply and demand in my 30 years of experience following commodities, commodity equities, anything like this. And what I tell people to try to bear in mind is that these systems are very complex systems. Let me just take copper as an example. Traditionally, when you try to grow a commodity supply by more than GDP plus a couple of percent, things just start to break. The stress on the system is too much. It could be transportation, it could be not being able to hire people or whatever. What you're asking the lithium industry to develop over the course of the next 6 years, let's just say to 2030, is to go from about 500,000 tons a year last year, ballpark, to somewhere between 2 to 3 million by 2030. It all depends on the EV penetration rates, of course.
Yeah.
But those are compounded annual growth rates of 15, 20, 25%. And that kind of thing has never been done. Now, when your base is low at the very beginning, we're just starting out, sure, producers can bring on brownfields, et cetera, but you also see that's a double-edged sword, because when prices start to go lower, they quickly retract those expansion plans and you're back to where you were. So as long as there's a mismatch between supply and demand, and in my opinion, there's going to continue to be that mismatch, it's going to make lithium prices bubble up. It's going to give us all a very, very good tailwind going forward. And that increases the value of projects like Bonnie Claire. We have tremendous sensitivity to rising lithium prices. At $13,000 lithium prices, we have a $1.5 billion NPV. At $30,000 lithium prices, we got a $4 or $5 billion NPV. So that's the kind of thing as an investor I always looked for. And as I said, I have never seen such a mismatch in supply and demand during the course of my career.
I want people to understand the correlation that you mentioned. So for the folks at home that may not know, NPV, when you're making that comparison, what exactly does that stand for and what does that mean?
Okay, so NPV it's one of those concepts that you don't really come across in everyday life, but you're looking at a way to say, hey, if I have cash flows out in the distant future, how do I value them? And basically, you make some assumptions and you bring them back, you discount them, and you say, okay, I've made $100 going forward. It's going to cost me $50 to build the mine, so I net all that out and I have $50 left. That's my NPV. Now, those future cash flows can get much, much bigger if you say, well, you know what, for every pound of dirt I'm bringing out of Bonnie Claire, instead of getting $1, I'm getting $1.30. And that's the leverage that I'm talking about. That's the leverage to rising lithium prices that I think is really going to make people's eyes pop when they see basically maybe an updated PEA, a PFS, and ultimately our feasibility study from Bonnie Claire.
Yeah, that's what I wanted folks to take away is when you're mentioning the rise of lithium prices and how it correlates to a positive impact on your business, they can understand what exactly that translates and what that means in terms of dollars. What would you describe as like your value proposition to investors?
So here we are. Typically, you look at the value of a company as its market capitalization, right? So shares times price. And we're sitting here, $30, $35 million Canadian, $20, $25 million US, however you want to look at it. And we have 100% control of one of the largest lithium resources in the world. And nobody knows about us because we haven't been able to market. We've been concentrating on get 100% ownership. That's the mismatch that if you look forward over to 2030, we would expect that the value of this company should basically rise to get the net present value. And I don't think it's $1.5 billion, because I don't think that $13,400 lithium is a long-term lithium price. I think it's much higher. So when you look about this, the reason that we all get involved with junior resource stocks is for this kind of potential return. We're not investing for S&P and 500 returns in this kind of environment. Here, you've got, obviously, you've got a great project in the best mining jurisdiction in the world, and you can get in at very, very low levels here because nobody knows about us.
Yeah, you got to find those hidden gems, a needle in the haystacks that, with the prices and the timeline that you've laid out with Bonnie Claire project looks exciting. What else is there that you'd like for our viewers to hear about, right? We talked about so many different things in terms of the timeline of the Bonnie Claire project, what the value of it is, the growing supply, the challenges you might face there. Any other topics that you wanted to discuss that I didn't bring up?
I would just say one of the things that I'd like people to really watch is how we start to address our most recent drilling results. We have a massive project here. Probably many of your viewers understand lower grade gold with high tonnages, Carlin type of gold versus, high grade vein structures, that kind of stuff. The analog is sort of simpler, the same here, with lithium. But our last round of drilling, our last couple of holes, have shown us that we have this massive open blanket of increasing at depth and increasing in intercept length of increasing grades. And the way that could actually turn Bonnie Claire into, frankly, more of a beast, because she's already a beast, is something that I think is going to be, frankly, very, very astonishing to investors. And those who don't know about us now, I think there's not going to be any alternative. You will hear about us because of the potential coming out of this incredible project. We just have a tremendous amount of optionality in terms of brine, other things at surface. When you have a footprint this big, there's a lot of things that you can do. And we pride ourselves on thinking outside of the box. This is a U.S. project. I'm a U.S. CEO. That's not incredibly, the way things normally are with junior resource companies. Ultimately, we think this is destined to go on to the major U.S. exchanges at the proper time. This thing has got all of the attributes the big mining companies, energy companies, car companies want to see. And we're going to develop it as responsibly and quickly as we can.
You got to make sure you do it right and not just quick. Steve, thank you so much for hanging out with us.
I appreciate the time. Thanks so much for the opportunity.
Absolutely. That was Steve Rentschler, who is the CEO of Nevada Lithium. Ticker on the OTCQB is NVLHF. And for everyone else that's been watching this, we appreciate you for hanging out. We hope you've enjoyed the conversations. Again, mining, minerals, you've got lithium, gold hitting all-time highs. There's so much here to explore. We hope we provided some insights from analysts, executives, and much more. And we thank you for watching. Until next time.